Are you strong enough to battle the titans? Alone or with a battalion, there's always a way. Here is an epic battle of wills. It was a battle between small investors and Wall Street hedge funds. Simply put, a bunch of retail traders who trade on the stock market for their own personal accounts instead of an organization on Reddit pushed up the value of shares belonging to GameStop, a video game retailer. In the process, the Redditors foiled the plans of several hedge funds who were betting that the GameStop share value would go down, causing the hedge funds to lose billions of dollars. What is shorting? This is when you borrow shares from someone and make a bet that the share price will go down. You then sell the shares at the current price, then buy them back once the price goes down, and make a profit in the process. Importantly, the shares must be returned to whomever loaned them out after a period of time, along with some interests. Is it complicated? Here's a simple analogy using pineapples. Tom has a basket of pineapples. The market price of pineapples is $10 a piece. Sam comes along and takes one pineapple from Tom, promising that he would return the pineapple after a week. Sam goes out and sells this pineapple for $10, which he promptly pockets. It is pineapple season, and he is pretty confident that the price of pineapples will go down. He surveys the local pineapple shops closely, and true enough, the price of pineapples falls by $2 within one day. On the fifth day, the price of pineapples falls by another $3. Seizing the opportunity, Sam buys a pineapple for $5, which he returns to Tom, receiving $10 for the first pineapple and paying out $5 for the second pineapple. It means that Sam made a profit of $5, all without needing a pineapple of his own. Shorting shares is not illegal. In fact, many Wall Street fortunes have been made this way. It is, however, very risky because the losses can be immense if the price goes up instead of falling. Going back to the pineapple analogy, Sam would make a loss if the price of pineapples goes up to $20, due to perhaps because of a blight that ruined a huge shipment of pineapples. Buying a pineapple back at $20 means that he makes a loss of $10. So now, Redditors decide to mess with Wall Street hedge funds. And let's return to GameStop and the Wall Street hedge funds. Many hedge funds and investors went to borrow GameStop shares from the company's shareholders. They then sold the shares, betting that the share price would drop, while they expected that they would be able to buy back the shares at a lower price later. Now, a number of small investors on the Wall Street Bets subreddit forum noticed that GameStop stock was heavily shorted by many hedge funds on Wall Street and investors. Redditors then promoted the buying of GameStop shares, framing it as a battle between small investors like themselves and the big Wall Street firms and hedge funds, and spurred the price of GameStop shares upwards by buying and selling among themselves. This is called a short squeeze. Using back the pineapple selling analogy again. Encouraged by his success with Tom's pineapple, Sam decides to borrow Tom's entire stock of 1,000 pineapples, promising to return him 1,000 pineapples in a week's time. Sam takes the pineapples and sells them for $5 each, and he makes $5,000. Sam bets that the price of pineapple will fall even further, perhaps to $3. Then, when he buys back all 1,000 pineapples, he would still make a profit of $2,000. Nice, isn't it? Now, a group of Redditors finds out about Sam's profit-making scheme. Together, they go around the country buying up all of the pineapples that they can find. They then drive up the price of pineapple by buying and selling the fruits among themselves on Reddit. By the end of the week, the price of pineapples is $80 a piece. Sam having to return 1,000 pineapples to Tom by the deadline. He has no choice but to spend $80,000 to buy the pineapples back. However, Sam does not have $80,000. He would have to seek help from a buddy for a bailout, or suffer the losses and be declared a bankrupt. Here is a very big losers and very big winners. And the same thing happened with the price of GameStop shares. On December 31, 2020, each share cost about USD $19. By January 26, 2021, the price had soared to about USD $148. By January 28, it climbed up to USD $346.51. Reuters reported that GameStop shares jumped by a staggering 1,600% in the last few days. At this point, the investors and hedge funds who shorted GameStop shares would face huge losses if they bought back those shares and returned them to GameStop shareholders. Conversely, those small investors who bought GameStop shares, but not for shorting, would have made quite a tidy sum if they decide to stop holding on to the stocks and sell them. One Wall Street Bets trader claimed that they turned USD $50,000 into USD $11 million by playing options, reported by Vox. So now, when will it ever stop? We have to wait for further news on this. Thank you for watching. Please click and subscribe and comment below.